So we have the FOMC statement behind us. We have the CPI report behind us. What's in store for the market now? Are we going to finally be able to put that bottom in and start taking our shot at the all-time highs, or is it all down from here? In this video, what I want to do is not so much focus on the daily, though we are going to look at that, but I want to focus more on the weekly, because when you pull back a little bit, when you zoom out and look at the bigger picture, you get a better idea for where the market's gone and where the market's going. So I think it's going to be a really interesting take to look at the weekly chart and to do some technical analysis on the weekly charts versus the daily or the intraday charts. So with that being said, let's go ahead and get right into the charts. So first off, let's SPY. This is the prevailing long-term trend. Man, I have been talking about this particular trend line till I've been blue in the face, because it's just been going on for all year long, and it's constantly rejected price. So again, you have it in January, you have it in March, you have it here in August, and then again you have it in November, and so far again in December, and it can't close above it. The best shot that we had was just yesterday with the CPI report. We had the massive gap above it, only for it to pull back before the end of the day and close not only below the rising trend line, but also below the daily 200-day moving average. But let's look at what the weekly chart has to say. So on the weekly chart, we have the same trend line still in place, obviously, but you can see the last 3 weeks, it has tried to break through it and cannot seem to do it. And obviously this week, it went all the way up to the 50-week moving average, could not break above it as well, and it's been rejected as a result. Massive upper shadow on this weekly candle here that suggests there's a lot of weakness, that the bulls are not able to hold on to their gains. So as we go into the latter parts of the week, it's going to be interesting to see if it gives up all of the gains and actually finishes red. If it does, that's going to be a very negative sign for the market going forward, and one that I would suggest that I would expect we'll see a resulting retest of the October lows of this market. So keep that in mind, because the rejection at the 50-week moving average, and again of this declining trend line, is not the best sign for the overall market. Now, let's look at the Qs. And the Qs I think is pretty interesting too, because you have this same declining trend line, though it doesn't take into account this peak right here from back in April, because it managed to break through it. So if I draw this line using the highs from March, you can see it doesn't work anymore, because we broke above it just for a little bit there. But when you ignore that part, which you should do from a technical standpoint, and take into account the high peak from August, you can see we're testing that level again. We tested it today, we tested it yesterday, and price was rejected. So now when you zoom out a little bit more, this 200-week moving average is clearly in play. If you remember, this is the level that we bounce off of when it's tested in minor pullbacks in the market, like 2020, like 2018, like 2015. But when you start getting into the 2008s and the 2000s, you can see we blow right through these levels. Okay, so if this is going to be a market pullback like what we saw in 2000 and 2008, then it's going to blow right through this 200-week moving average. All right, so let's go back to the current day here. And what else do you have here that's worth pointing out? You got a bear flag pattern. So this bear flag pattern is starting to play out to the downside. We're getting very close to a test and a break to the downside. So if we break below last week's lows, this pattern is confirmed to the downside. And then again, I would expect us to break through the October lows and add a little bit more in additional losses from what we've already seen at the worst levels. Finally, let's take a look at IWM. IWM, not as bad of a picture, right? Because we never broke the June lows like the other indices did. The other indices back in October broke the June lows. This one didn't. Instead, this one formed essentially like a double bottom, right? So we got the double bottom, but over the last 3 weeks, and out 4 out of the last 5, it's tried to break back above this declining trend line and has not been able to do so. So that's a big point in contention right there with the overall market. So to this point, we're back below the 200-week moving average as well on the weekly chart of IWM, and it suggests that there's a good chance that we're going to retest this double bottom level that goes back to about 162, 163. Now let's look at it from the daily standpoint, okay? Because I don't want to completely ignore what we're talking about there. Again, On IWM, you have this rising trend line. That one's been broken. We tried to regain it back with the CPI report, could not get back above it. So now we got that 50-day moving average. That one's being tested. It's not got a huge history with the 50-day moving average, but I would just say that about 3 trading sessions ago, and we tested it and held it, and then the following day we tested it and bounced off of it. So it's worth noticing, especially when you consider that the lows of today came right at that 50-day moving average as well. But you also have a convergence of the 200, the 20, the 5, and the 10-day moving averages offering up some resistance on price there. Now, let's go back to the Qs, look at it from a daily perspective. We got the bear flag. Doesn't look as pronounced on the daily as you see it on the weekly, but you can see that it's still being weighed down by the price action of this declining trend line. And if it does break below this 277 level, that's going to be a huge problem going forward. Now, SPY on the daily, one thing I'd want to say is, if you find that the last few months have been difficult trading, you're not alone. When the market gets real choppy like what we've seen, it's going to be difficult trading. And when you look at what we saw from September through October and early November, a lot of sideways price action, right? And then you take what we've seen in November and so far here in December, it's more sideways price action. And really the difference that separates these two ranges is about 2 days of trading that took place back on November 10th that essentially was just one huge gap higher and a rally thereafter that put us into another sideways trading range. Those are difficult, and there's been a number of occasions where we've seen sideways price action and they have led to big reversals. So now that we're seeing a sideways price action to the upside where we're testing the declining trend line, I'm expecting us to see that retest of that 350 of the 350s in SPY. So here's the bottom line. Could the market go higher? It sure can. I'm not going to sit here and act like I have a crystal ball because I don't. Nobody does, right? But what we can do is we can look at where is the path of least resistance. What's the possibilities if we break support A or we break through resistance level A? And you can start to say, okay, that's not going to be a good thing. That's something that we can react to. That's something we can short. If it breaks through the declining trend line, that's something we can get long on. But you have to be willing to react and not necessarily predict. A lot of people get themselves in trouble when they start thinking and predicting what the market's going to do rather than reacting to what the market's supposed to do. So if you enjoyed this video, make sure to click the join button down below and get some more of my members only videos. I do 2 at least each and every day. I mean, you're talking about a lot of information being sent your way through my YouTube membership. So click the join button down below. You'll get setups. You'll get watch lists, you'll get my updates on the overall market, plus big tech updates. It's just packed full of really good content, and you support this channel at the same time. Also, make sure to like and subscribe, click the bell to be able to get those notifications as well. Thank you guys, and God bless.